Okay, hi everyone. Welcome to today's webinar. I can still see some people joining, so I'll give about 1 more minute to let everybody join the session before we get started. Yep, in the meantime, let me know if you guys can see me and hear me, as well as obviously can see my slides. And yep, I will see you guys in about 1 more minute. Thanks, everyone. Okay, let's go ahead and get started. Okay, so for today's session, we are going to be looking at Fibonacci, the second part of our Fibonacci series, which is Fibonacci extensions. So, as per usual, before we get started, a risk warning and disclaimer. Our products are traded on margin and carry a high level of risk, and it is possible to lose all your capital. These products may not be suitable for everyone, and you should ensure that you understand the risk involved. Disclaimer, the information in this webinar should not be considered investment advice or an investment recommendation, but instead educational material only. This material is just the personal opinion of the author, and the client's investment objectives and risk tolerance have not been considered. IronFX is not responsible for any loss arising from any information contained herein, and redistribution of the material is strictly prohibited. I'm Melanie, and I'll be your speaker for today. I'm an investment analyst from Rocket, who are finalists for Best FX and Equity Research in the years 2019 to 2021. So here's our agenda for today. We will do a very quick recap on what we went through last week, because this extensions plays a lot into what we learned last week with retracements, because it uses the same tools as well. So we'll do a bit of recap on that. And then we'll look at the ideal market structure, some things to look out for, followed by the different Fib retracement levels. And then we'll dive into what exactly Fibonacci extensions are and how we can find Fibonacci confluence areas. And if we have time at the end, which I think we will, I'll do some live analysis as well. And then you guys can let me know if there are any requests for any specific charts that you'd like me to go through. Okay, so starting off, let's start off with a quick history lesson on the origins of Fibonacci. So Fibonacci retracement levels were actually named after Italian mathematician Leonardo Pisano-Bigolo, who was famously known as Leonardo Fibonacci. However, Fibonacci was actually not created by the Fibonacci sequence was not created by Fibonacci. Instead, he was introduced to these numbers, and he introduced it to Western Europe after learning about them from Indian merchants. So Fibonacci retracement levels were formulated in ancient India between 450 and 200 BCE, and the sequence is also referred to as nature's numbering system, and it's often observed by known people in flower patterns, hurricane patterns, and even galaxies. So here's a simple checklist to follow when starting out with Fibonacci retracements. So firstly is to check if the market structure is clear. You want to make sure that you're looking for really big zigzags, and we'll show you some examples in the coming slides. Number two is to identify recent trends. So is the price going up or down? And it's always important to follow the general trend. Number 3, you want to identify recent major swing lows and recent major swing highs. And always connect the two extreme points, highest to lowest for a downtrend and lowest to highest in an uptrend. So you can see in this example here, we are going from highest to lowest since price is moving in a downtrend. Okay, so here's an example of a clear market structure. So we've drawn out exactly how clear you should be able to see the shape. And although these retracements, extensions, all of these Fibonacci techniques can be used in both choppy and trending markets, but it's definitely more effective in when you use it on a clear market structure. Okay, now looking at an example of an unclear market structure, this is something that you want to make sure that you avoid. So yeah, you can see that it's very choppy, there aren't very clear movements in price. So one way that you can find clearer market structures to do your Fibonacci analysis is to adjust the time frames so that the market structure is clearer. So what might look messy on an M30 chart might actually look very clear on an H4 chart. So if there's too much chaos in the shorter time frames, it doesn't mean that the entire currency pair or commodity that you are looking at trading is not able to be analyzed at that point in time. It could simply mean that we need to kind of take a step back or sometimes a step forward to get a clearer view. So here's an example of an unclear market structure on the 15-minute time frame. So you can see it's quite messy. There are no clear movements in price. And when we change it to the 1-hour time frame, you can see the highlighted portion has a much clearer market movement. So the two criterion that you should look out for is firstly a clear swing low or swing high, and secondly a clear trend between starting and the ending point. Then your Fibonacci retracement is likely to be accurate.
Yes.
So now that we know what conditions to look out for when using the Fibonacci retracement tool, let's kind of look at how we can use it on MT4 and TradingView. So I'm going through this again because we are using the same tools, even though it is a different technique to what we learned last week, which was retracements. Extensions use the same tool. And these extensions, or rather this retracement tool, we will also be using it for the next session. So the third part of our series, which is on expansions. So it's quite important that we know where to use it, how to find it, so on and so forth. Okay, just give me a second. Okay, so okay. So as I was talking about earlier, we are going to look at how you can use the Fibonacci retracement tool on the MT4. So here we have the layout on MT4 if you've used it before. Now, if we zoom into our toolbar, when you hover your mouse over this option here, where my mouse is at, it should say Draw Fibonacci Retracement. Okay, and after which you can click on whichever or wherever you want to place your Fibonacci retracement, and it should come out looking something like this. Okay, you can on MT4 you can also customize it, so you can customize the colors, you can customize which levels you want to look at. But if you want to edit or add any specific levels, you simply right-click on the Fibonacci trend line, and this is what it looks like. So you'll be shown this Fibo properties option. So when you click it, under the Fibo levels tab, you can then proceed to add or delete whichever levels you wish. So you can see here, I'm clicking on add, and I've added a negative 0.618, which is essentially a minus 61.8% level. Okay, now if we take a look at Fibonacci retracement on the TradingView app, here we have a typical layout on TradingView looking at pound dollar. So for TradingView, the Fibonacci retracement tool is the symbol with the 4 horizontal lines, and you'll be able to find it on the sidebar as well, or on this floating bar. So after you've connected your Fibonacci trend line, remember if it's a downtrend, you want it to be from the top to the bottom. So this floating bar will then come up, and when you select settings, this selection box will appear where you can select any other levels that you wish. So when first analyzing the levels, we will typically select all of the levels that we're looking at, regardless of whether it's mid-range for retracements, negative, which is for expansions, or the levels that are above 100, and those are mainly for extensions. We'll just look at all 3 sections, so that it's easier for us to see which levels line up with our horizontal levels. Okay. You might also find that when you are looking, especially when you're looking for confluence levels, which are basically areas where there are 2 or more Fibonacci levels that line up. So in those scenarios, you might find that it gets a little bit messy with all of the numbers, like you can see here. Imagine, 2 or 3 of these lines. So it might get a little bit messy. So that's one of the ways that you can prevent it from getting so disorganized is simply by selecting those that you need and getting rid of any levels that are not necessary. So it cleans up your chart and it's a lot easier to analyze. Okay. So let's now talk about the different types of Fibonacci retracement levels. So if you were here last week, I already went through this quite briefly. But if you want, I'll just do a very brief recap. So I mentioned earlier the different types of Fibonacci techniques. So there are 3 types of techniques that we use when it comes to this Fibonacci tool. The negative levels are the expansion levels, and we'll go through those next week. The mid-range levels we went through last week, and those are called our retracement levels. And lastly, the levels that we'll be looking at today are our extension levels. So those are greater than 100%. So here you can see all the different fib levels that we mentioned on the previous slide and how it looks drawn out. So this is what I mean by when you're first analyzing, we will just go in with all of the levels. Okay, so that we can kind of see which levels line up where. Okay, so with just one tool, we can actually use 3 different methods. Okay, so here's an example of the Fibonacci retracement method. So price bounced off the highlighted area of 61.8. You can see, and it's now a swing low. Here's another example of Fibonacci retracement method. So the 38.2% Fibonacci retracement level is in line with the overlap support at the 32544.21. So you can see price just bounced off this highlighted area here. Okay, so here's an example of what I talked about earlier, which is the confluence area. Basically, we have one level here, and it's at our swing high. This lines up with the 61.8, with another level here, which has 2 swing lows in line with a 61.8 as well. Okay, I won't dwell too much on expansions. I want to talk about the invalid Fibonacci retracements. Actually, okay, let's do a very brief intro into what Fibonacci extensions are, because I think in this example, you can see very clearly the shape that we're looking for. So for Fibonacci extension, we are looking at the levels that are greater than 100%, right? So it's namely the 127 as well as the 161.8. And the shape that we're looking for, you can see here it says a V shape, but it's more a Nike tick shape. So that's kind of what we call it. But basically, as long as the tail end of your tick surpasses 100% of your Fibonacci trend line, that's good. You're good to go. And the objective of using an extension is basically to project where you think prices are going to reverse off. So we'll go through more examples, but I think in this example, you can see very clearly what the shape is supposed to look like. You can see the yellow arrows showing us that kind of tick shape. And then you can see price surpassed, or rather it bounced off the 161.8 and resulting in a reversal. So when does a Fibonacci retracement become invalid? Okay, so one of the most common scenarios of an invalid Fibonacci retracement is when price makes a lower low. Okay, this is assuming you're drawing your Fibonacci retracement from the top to the bottom. But if there are bars on the right that break your ending point, it then becomes invalid. So there are Fibonacci retracements that are negative, so your minus 27 and minus 61.8. And those are still valid even though they are negative, but we'll go through those again next week. Okay, so let's look at combining Fibonacci retracements. Okay, so here's a pretty good example because we are using 3 different types of techniques with just one tool. So here you can see we have, okay, if we focus maybe on the red. Okay, let's focus firstly on the gray arrows. So you can see this is where I'm drawing my retracement, and the Nike tick shape for this case is actually inverted. So the head is here, the short end of the tick, and then the longer end of the tick is this black arrow here. Okay, and we can see price actually bounced off this confluence area. That's also in line with the 161.8 Fibonacci extension. So this Nike tick shape is what we are focusing on today. So you can see our 161.8, there's one here, and then for the red part, that's part 3 of our series, and I'll go through this next week. But just briefly, for expansions and the negative levels, we're looking at this lightning bolt shape, or like a flash kind of shape. So we're following the red arrow as well as this black arrow here. Okay, how you draw your retracement would just be from this part. So from this to here. And lastly, the projection. So this is the 4th part of our series, which I will go through the following week. So for this one, again, we are looking at this lightning bolt shape. So we're using that same shape, but instead we are using a different tool. So I'll go through this again in 2 weeks' time, but this uses a different technique. Okay, but this is just to show you guys how you can make a Fibonacci confluence area. Okay, I won't dwell too long on that. This example is also a very good example, or a very clear example of the kind of shape that you can look for an extension. So you can see, oh, actually we've missed out the extension here in this chart. Okay, but you can see that the yellow arrows show us that Fibonacci extension. Okay, but that wasn't the point of this this chart because you can see that price actually bounced off here. So the level that we were looking at for this chart, even though there is the presence of this Nike tick, was actually the reversal off of this horizontal level. So that's why we didn't add in that additional extension level here. We're just showing you guys that prices bounce off this confluence area with a 61.8 retracement. This is the blue arrow, and also the projection, which is our another tool that we'll go through in 2 weeks. Okay, these two don't go through extensions as well, so I won't dwell too long on that. Some things to look out for. This is an example of an insignificant swing, which is incorrect to use when we're looking for clear market structure. These are also really quite bad points to use for a Fibonacci extension as well, because as you can see, even though you might see some of these small movements to be considered a Nike tick shape, they are not as effective as if you were to find a bigger or a chart with a bigger movement. Okay, here's another example. There aren't really any clear swing highs or lows. Price movement is pretty small. So something you want to look out for is significant swings with a clear market move up and down with obvious peaks and troughs and clear market movement. Here's another example. Okay, so now that we know, we kind of have an idea of what the extension is. So just a checklist, I guess, to follow. Tool used here is Fibonacci retracement. The percentages that we are using are the 127 and 161.8. And we're looking for a Nike tick, as I mentioned earlier, to find these very powerful setups. Price usually retraces the entire move from 1 to 2, and hence the reason the retracement is more than 100%. So the clearer the movement of the Nike tick, the better. So you can see in the GIF the shape of the Nike tick, where we are drawing our retracement, and where we are projecting our prices to reverse off of. So once price reverses off that 127 level, then we go in for, we expect a reversal of the 161.8 level. Okay, looking at another example here. This Nike tick shape is quite small. Okay, but we're basically focusing on this part here. Okay, so this is on the daily time frame, okay, where you can see there is a swing high that's in line with the 127.2 extension. So now let's zoom in and view the same chart on an H4 instead. So we get a clearer view. Okay, so this is the chart on an H4 time frame. So you can see how price reversed really nicely off the 127.2 Fibonacci extension level. Okay, now in this example, we have an inverse Nike tick. I also gave you another example earlier of an inverse Nike tick, which is basically an upside down tick. So the starting point is over here, ending point over here, since price is moving in an uptrend for this area. So take note of the swing low support at 0.91565, and that's in line with the 161.8% Fibonacci extension. So that makes it a really strong support level where price can bounce off. So we'll talk a bit more about how combining different Fibonacci methods as well as support and resistance levels can increase the accuracy of your analysis in the next couple of slides. Oh yes, I also wanted to give you guys an example of an invalid Fibonacci retracement because we went through it, but there was no image. So I'm just going to show you guys now. Okay, so here's an example of an invalid retracement. So remember earlier we mentioned that price, when you draw your trend line, there shouldn't be anything on the right. so the ending point should be the lowest point. Yeah, so in this example, you can see price has broken this 0.0% level. It's made a lower low. So thus we cannot use this ending point here as our retracement. Okay, so what exactly is Fibonacci confluence? I briefly touched on this in earlier, but it's basically finding multiple Fibonacci levels that line up together so that you can um increase the probability of a bunch of Fibonacci levels working versus one retracement level working. Okay, so we already saw this example that's attached here earlier. Okay, I'll go through this example instead. So here we have two Fibonacci levels. We have one inverse Nike tick, and we have another projection level. So you can see the projection level has 3 points, 1, 2, and 3, and the 61.8 level is our projection. Our extension is this upside down shape here. Okay. And for this, we are expecting price to reverse off the 127 level, which it did bounce off this confluence area here. Okay, this is a rather small example. Over here, we can see it better, I think. So the Fibonacci extension here in this example is a Nike tick again, and it's upright this time. Okay, and that 127 level is in line with our Fibonacci projection. So again, Fibonacci projection has 3 points, and we'll go through this in 2 weeks. But basically, there is this lightning bolt kind of shape, and the 100% lines up nicely with our 127.2. Okay, so you can see price reversed nicely off of this level. Okay, another example. Here we are combining our extensions with our expansions. So expansions or the negative levels we will go through next week. But these again are the lightning bolt shaped and negative levels. So you can see, I think you kind of see the shape of the lightning bolt here, and the minus 61.8 lines up with our extension. So remember, our extension is the Nike tick. Okay, you can see it definitely surpassed the length of this trend line. Okay, so the 127 actually lines up nicely with the minus 27 as well. So if we started analyzing this before price reached this level, we'll probably wait for price to break out of that level before going in for buy towards this area, and then ultimately expecting it to reverse off. Okay, any questions so far? Okay, we have a couple of questions. Okay, firstly, can you do a recap of the steps again? Yes, just give me a second. And then do you mind repeating the Fibonacci level settings? Yeah, we can go back to those slides. Mm. Are you talking about the settings on TradingView or on MT4? Okay, because this is on MT4, this is how you use it. We're looking at this tool here. So if you hover your mouse over that option with the lines, it will show up draw Fibonacci retracement. So that's the tool that we're using. This is what it will look like. And if you want to make any changes to the Fibonacci properties, you just click on that option. Under the Fibo Levels tab, you can click on Add, and you can proceed to add whatever levels you wish. Okay, that's on MT4. This is on TradingView. So, yeah, we're basically using this tool here, Fib retracement, or over here on the sidebar. So you click on that, click on settings. Okay, so after you use this, you basically connect the two levels. This is what it'll look like. And then a floating bar will pop up. So you can select any specific settings that you want. Can adjust your levels. So these are all of the levels that we use for the three different Fibonacci methods that use this one tool. Okay, but there are different levels for each method. Okay, I hope that helps. Okay, and then these are the levels, specific levels that we look at. Okay, does that answer your questions? So the recap of the steps. Um, you mean the checklist? Okay, if it's the checklist, it's just basically all of the things that we want to make sure that we look out for. So is the market structure clear? We want to look for big zigzags in your structure. And then you look for the recent trend. Are prices going up or down? Or are they moving sideways? So we normally will recommend you to follow the general trend unless you have quite compelling reasons why you think there might be a reversal. So you could be looking at pivot points, your confluence areas, or some of the techniques that we are talking about in this webinar. Yeah. And number three, identify recent major swing highs or recent major swing lows. And those we already talked about as well. And lastly, to connect the two extreme points. So as you can see from the example, we're connecting the highest to lowest if it's a downtrend, or lowest to highest if it's an uptrend. Yeah. So let me just finish my slides. I think we have one more example. Yeah, we've gone through this. We've gone through this as well. So we just one more example, and then we'll get into our live analysis, and I'll show you guys how we go about using Fibonacci. Okay. So in this example, we're combining three methods again. I'm going to start off by just focusing on the extensions since we're talking about that in this webinar. So the extensions are the purple colored icons. So the purple arrow is where we're drawing our trend line. And you can see the 127 is in line with all of these other Confluence or all of these other Fibonacci levels to the expansion as well as the projection. I think in this chart, you can also see quite clearly the lightning bolt kind of shape, right? It's like a flash symbol. Yeah, and then price subsequently reversed off of this huge confluence area here. Some trade management before we get into our live analysis. You want to make sure you place your stop loss beyond a key Fibonacci confluence area, because if price is attracted because more often than not, price tends to be attracted to such strong areas of confluence. And if your stop loss is right before instead of beyond it, you will most likely get stopped out before the market reverses. Okay, and that's also one of the reasons why people get stopped out right when the market starts to reverse, and then they start complaining about stop hunting. For your take profit, you want to make sure that you place it before a key Fibonacci confluence area. Reason for this is because when price reaches your confluence area, there's a high chance that it won't be able to go beyond it. So instead of reaching your profit target, it reverses back to your entry, or even worse, your stop loss. And that's also one of the reasons why people might complain that the market is being manipulated, because they might miss their take profit by 1 pip. Okay, that's all the examples that I have for today. Um, I will try to find some charts now. Um, oh, I think gold has some. Hmm, okay, maybe not. Let's look at the XY, maybe. Okay. Um, do you guys have any requests for any chart that you'd like me to go through? And then we can do that instead. Okay, here's an example. So, um, here, right? Okay, actually, we have two examples here. Okay, if I move back to maybe over here, okay, and okay, so we're looking at this on our 4-hour time frame. So I'm just gonna draw out the shape so that you can see really clearly what it's supposed to look like. Okay, so this is the Nike tick shape. Um, so I'm projecting where prices are gonna hit towards. Right, so the first step that I like to use is going in graphically with our horizontal levels. So this I can see is a resistance level because it's in line with a swing high. So then I will go in with my Fibonacci retracement, this tool here, and we'll draw out we'll follow this shape. Or actually, even here we have an example. So what I went through earlier, that's an example of um an upright Nike tick. So, just your normal Nike tick that looks like that. If it's an inverse Nike tick, like we've gone through some examples, ooh, it will look like that. Basically an upside down tick. Okay, which is what we have here. So I'll play it for a bit. So you can only use this method, remember, when price has fully surpassed 100% of your this trend line or this Fibonacci trend line. Yeah. So I can see it's already surpassed it. The Nike tick shape here is like this. Okay, that's the hit, and this is the tail. And I'm expecting price to. I'm firstly looking at that 127 level. Okay, we only go in towards the 161 after price has broken out of this level. So you can see here really clearly that price has already broken out of this level. This 127, slightly. Okay, so it broke slightly out of it and then reversed back up. Okay, so that's kind of how we use it. If we continue looking at it, okay, here I have another Nike tick shape. And this one is bigger and it's also upright. Okay, and I'm going to place my retracement level here. So again, we're waiting for price to break out of this 127 before going in, before expecting it to continue to our 161.8. So I'll play it. So we're looking at 127 level. Price is testing this level. And you can see it moved all the way up to our 161. Oh, it's actually currently at our 161 level, if you see here. Okay, so you can already see price reversing off of that level here. Okay, so price already is kind of testing that level. It's not able to break above it. Yeah, because of this swing high and also in line with the 161.8. Okay, this is on our euro dollar, just as an example. Okay, if I have another Nike tick level here. So this is what I mean by it gets a bit messy after a while. So because I was only looking at that 168, I can click on this and keep just the level that I'm looking at. So you can see it's a lot clearer and a lot neater. Yeah, so here, this Nike tick shape is like this. Okay, and the level that I'm focused on for here is the 127. So you can see our 127 is in line with our 161. So this is actually a confluence area as well. Yeah, so that's an example of how you can, and in this case we're actually only using one method, just on different parts of the graph of the chart. Yeah, but you can, once you've mastered all of the other Fibonacci methods, you can also use those to kind of find these confluence areas and predict price reversals, or yeah, predict where price is heading towards. Okay, any other questions? This webinar is being recorded. Um, I'm not sure if you will be able to access the recording. I think if you email the IronFX admin team, they'll be able to help you out. Okay, there's a request for HSI. So we still have a bit of time, so I'll go ahead and look at that as well. Okay, so I like to start off by looking at the higher time frames first so that we get an idea of the direction that prices are headed towards. So on a weekly time frame, you kind of see a general downtrend, but recently prices have been heading upwards. On our daily time frame, quite bullish as well. You can see prices heading upwards. Mm, yeah, I guess in this case, we can see even though there is this Nike tick kind of shape, right? But it's quite obvious that price has already broken out of that 161.8 level. Okay, let me show you what I mean. Okay, so you can see price has already broken above it. So it's not really relevant in this case. Um, okay, but anyway, we'll just go ahead and analyze this together. So I'm gonna okay. So firstly, I'll place a pivot level where price is currently at, and I'll also place a resistance level at the swing high. And for my first support, I'll place it maybe over here. Okay, because we have multiple swing highs, or price has tested this level multiple times. Okay, our let's go ahead and look at our Fibonacci levels. So starting off, I'm going in. There's something wrong with my trading view today. It's kind of laggy. I'm so sorry about that. Okay. Um, so again, we'll go through projections next week, but for now, I'll just show you what I would do. So the 78.6 lines up nicely with our pivot, so I'll just keep that. We also have a retracement over here. Okay, you can see the 78.6 lines up nicely with the pivot as well. Um, okay. So even though the 78.6, if you can see, it lines up with our first support exactly, but price has already broken out of that level, so it's no longer valid. Okay, and I'll go in with another retracement here. 50% lines up with our first support, and the 23 also lines up with our pivot. So I'll keep the 23 and the 50. In this chart, we don't really have any extensions, any Nike tick shapes, so I'm not gonna add any of that. So you can see this area here where price is currently at. This is a confluence area. Okay. So when you're placing your Fibonacci levels, they don't have to line up exactly in line with your horizontal levels. Because like I mentioned earlier, we're looking for confluence areas more so than specific levels. So as long as they're kind of close to your price, that's good enough. Yeah. So we might see price bounce off of our pivot, but generally the trend is still quite bullish. Okay, I like to look at Ichimoku and MACD indicators first. You can see price moving above the cloud, so it's giving us a bullish signal. MACD, you can see, is also giving us bullish momentum. And you can see price pushing way above the Bollinger Band. So this is also a bullish signal. So I am expecting price to continue pushing upwards towards our resistance. Just be careful of and be aware of this confluence area here, which we might see a bit of resistance at. Okay. Are there any last minute questions? Okay, if not, that's all I have for you guys for today. If you guys like me, like this webinar, feel free to connect with me on LinkedIn. It's just my name, Melanie Chong. And yeah, I'll see you guys again next week for the third part of our Fibonacci series where we'll go through expansions. And yeah, hope you guys found this session helpful. Have a great rest of your week, and I'll see you guys again next week. Thanks, everyone. Bye. Yes, it's the same time every week. Okay, thanks, everybody. No worries. Bye, everyone.